Hey everybody, so I just wanted to make another technical analysis video. Now we're going to start this off as usual. We're going to look at the Fed funds futures. So we're looking at the March and the December spread. So right now the March and December spread is giving us a reading of negative 0.2375. So it's still pricing in one rate cut. So moving on, we're going to look at the Qs. Now I got a lot going on here. So let me just explain the more recent price action. So we have this anchored VWAP that's anchored all the way to the top. We have this anchored VWAP that's anchored to the bottom. You guys can see that we just broke out of this higher anchored VWAP right here. So it's right at 316.34. Also do note that this anchored VWAP is lining up with the top of this resistance trend line right here. So as you guys can see, we're in this wedge formation. So it's defined by this resistance and this support right here. And the reason why we're in this kangaroo market is because we're essentially just bouncing back and forth between this rising wedge right here. So if we're looking at more recent price action, let me just zoom in here. We pretty much bounced off of the top of this resistance trend line, and then we're currently at 320.93. So let me just show you on a shorter time frame on a 10-day 5-minute candlestick chart. So you guys can see that we have the support trend line right here. Now this support trend line has pretty much been intact for the last 3 days that have produced these gaps right here. So we have this massive gap right here. It's right at 307.13 to 310.84. So this gap right here, it's a pretty big one. And then we have this other gap right here. It's at 313.35 to 314.46. So here's the concern here. We have this pretty steep trend line right here. So what happens if we break this? So if we do break this trend line right here, maybe we can retest the top of that resistance trend line right here. Or, maybe we break below this and then we fill this gap and then later we fill this gap. So, there's a lot of different scenarios that could happen. So let me just zoom out a little bit again. So let's go back to that 10-year 1 day and let's zoom in on this price action right here. So yeah, you know what, if we do back test, I think we could back test to that anchored VWAP at 316.34. And then like I said, we could fill these gaps down here. So if we did see a significant pullback, I think that could go all the way down to the bottom of this support line right here. So that could be right around the 50-day as well as this anchored VWAP to the bottom. So this anchored VWAP and that 50-day could kind of come into alignment with this support trend line. So, when that does happen, we will see how this alignment plays out. And, my belief would be probably, it would be closer to around maybe that 295 to 300 region is kind of where I think this could come down to. So that is what I would think in a serious pullback situation. Now, if you're a bear, you don't want to get too greedy. In this kangaroo market where we've literally just been bouncing back and forth, if we were to hit the bottom of this trend line, I would take profits right away. I would not be extra greedy and be, expecting a full-blown crash that would get us all the way back down here. Right here, I would take profits. And then, if we were to sell off further and break below this, I would expect a back test of this trend line. And then that's when you might start thinking, okay, well, maybe we could, upsize our put position again, but still be cautious in case we get back within this wedge. So definitely something to think about. Now let's zoom out a little bit again. And this time I want to show you guys the RSI. So do note that I have these purple lines. These purple lines are basically indicating every single time we have a new quarter. So let me show you guys what happened right here. So as you guys saw, as we were entering this new quarter, RSI was heavily oversold. So when we enter new quarters on heavily oversold RSI, we tend to have these massive rallies right here. So pay attention to what happened right here. So right here, RSI was still pretty darn high. I mean, it was kind of slightly above the neutral line. So right here, I have this neutral line in orange. It's right around 50. So for RSI, a reading over 70 is overbought. A reading below 30 is oversold. But if it's close to 30 and if it's close to 70, it's overbought or it's oversold. And this orange line, 50, that is pretty much the neutral line. So we were slightly above neutral, and we were already coming off from these oversold areas, or these overbought areas, my bad. And we did see a lot of consolidation here, which was just distribution. So, let's go into this quarter right here. So as we're going into this new quarter right here, we're starting to get in that frothy RSI level again. So we had about a 65 reading going into this new quarter. And then you can see that we sold off significantly. And then where did we end this quarter? Well, this quarter we ended up below the neutral line. So we were still a little bit oversold. And then, we had this massive rally. And then as we saw on RSI, we basically had this double top on RSI that occurred. And then you can see that we sold off. And then entering this new quarter right here, we were going into oversold RSI. So, of course we did have this little rally right here. But then, where did we end this quarter? We ended this quarter in low RSI. So we essentially had 2 quarters ending in oversold RSI. So, what happened in this new quarter, in this new year? Well, we had this massive rally that created this overbought condition where we literally went 70 plus on the RSI. So where are we ending this quarter? Well, we're ending this quarter on pretty overbought RSI note. So if you are paying attention to this trend that's going on, I do believe that, a sizable pullback could occur just based off this trend. Now, of course, I could be wrong, but, I showed you my basis for this. So this is my thesis, and this is what I'm showing you. If I'm wrong, well, then my thesis was wrong, but at least I had a thesis. So this is kind of what I'm explaining right here. So like I said, if we do see a sizable pullback, it could be the bottom of this wedge right here. And do note that this is a rising wedge. So, if we were to plop out of this wedge, where do I think we could officially land? Well, I think that could be right here around 285-ish. So do note that this area is tagged quite a bit. It's tagged right there, right there, right there. So it's been tagged several times in the last 1, 2, 3, 4 quarters. So in the last 4 quarters, it's been tagged every single time. So I wouldn't be surprised if we do just kind of like magnet back into this area. So do pay attention that we do have quite a bit of support. And we're above the 50, we're above the 200, we're above this lower anchored VWAP. So we got the 50 at 334. We got the anchored VWAP at 295.93. Do note that these levels are going to change if we do start falling. And we have the 200-day at 290.70. So right now we're still looking pretty good. And essentially, we could fall all the way to the bottom of this wedge and nothing will be technically broken. Nothing will be technically broken. As long as we maintain this wedge structure, the technicals are still there and nothing has been broken. So I want to be very clear about that. Right now, this is pretty bullish price action because this is a rising wedge. And if we do continue rising up this wedge, that's still pretty bullish because we are in an uptrend. So if we do break this rising wedge, then that is some technical damage. We've essentially broken out of the structure and then we create this uncertainty because we don't really know where things could go next. But right now, it does seem a little bit more predictable that it is going to be within this wedge structure. So now what happens if we just continue up from here? I always want to bring that situation. So if we do continue up from here, we're going to get into some serious overbought conditions. And then I do want to remind you that we have these gaps down here. So we have 2 gaps right there. Now, where could we essentially go? Well, just the way that I see it is, the next probable area will probably try and be to retest these highs right here. So that could go all the way up to these mid 330 levels, so like 335-ish. So that could be another, like 10, or my bad, that would be like another $20 from where we are right now. So we could still see a pretty significant move, but if we did, that would go onto these overbought RSI conditions. So definitely is something to watch out for. And if we did, I would pretty certainly think that we will come back to retest this trend line right here. So just something to think about. Now let's look at SPY. So SPY is a similar situation where we did break out of this higher anchored VWAP. So this higher anchored VWAP, it's right around, let's see. It's right around 407.33. So if we did see a slight pullback, I think we could at least pull back to 407.33. And then if we were to see a more significant pullback, I would think right around the bottom of this trend line, which could coincide with that gap right there. So as we can see, we have several gaps. We have 3 gaps on SPY. So if we were to fill these first 2 gaps, it could essentially line up with that trend line right there. So let me just show you guys again. So we fill these 2 gaps, it could line up with this bottom trend line right there. So this right there. So do note that, when we did sell off and we got below this trend line, we got right back above. And this gap right here is the one that got us back above. So I don't necessarily think that this first gap could get filled right away, but I do feel like these other gaps, the ones that we created on Friday and Thursday, I feel like those ones could get filled right away. So let me just kind of show you what's going on with those gaps on a shorter time frame. So we're going to go on the 10-day, 5-minute. So let's look at the first gap right here. So this one is going at 395.61 to 399.50. And then we have this one right here at 401.56 to 403.52. And then this one right here at 403.79 to 404.67. So one thing that I really want to basically point out is that on SPY, on Friday, we produced a gap. On the Qs in the technology sector, we did not produce a gap. So when I was going back and I was looking at a lot of the mega caps, I did not see a gap being produced on Friday. But I did see a gap on the financials. So I do think that this gap right here on SPY, this is coming from financial sector. And do keep in mind that the first half of the month of April is going to be bank earnings. So, we see a lot of fear with Schwab. So, we're going to see what people are so fearful about in Schwab when they report their earnings. So in the past, people, they don't really give too much of a shit about bank earnings, nor do people really understand how to value bank stocks either. So I think we're going to see a lot more focus. We're going to see a magnifying glass on a lot of these bank companies, and people are going to start paying attention to those unrealized losses. So definitely something that we need to think about. Now, going further on about SPY, we do have this trend line right here. So if we do break this trend line that's literally been the support for the last 3 days, we're going to start seeing a new trend, and maybe we start filling these gaps. So that would definitely be something that I would pay attention to. Now, let's just zoom out just a little bit more, or let's get back on the 10-year 1-day. And let's just talk about the RSI right now. So RSI is kind of high. It's at 61.2. But you can see in the last move here, we hit that 70 level. So we could definitely march on a little bit higher. I do have this resistance trend line right here, and we are in this rising wedge structure. So, if we were to hit the top of this trend line right here, oops. So if we were to hit the top of this, that could literally take us all the way up to like 428-ish possibly. So that would be in alignment with these former highs right here. So definitely something to watch out for. But I personally think that we can at least backtest this trend line first before we try and make a move up here. So I wouldn't be too bearish until we literally splice below the 200-day moving average. And by that time, we would be filling all 3 of these gaps. So the 200-day moving average is right at 392.62. We have a 50-day moving average at 401.15. And then we have this anchored VWAP right here that, I get a feeling that we're going to at least retest early on in the week, right at 407.33. And then where this support trend line is, that would be right around 402-ish. So it would line up closer to that second gap that we made on Thursday. So, I do want to bring in mind that we could go right back into this anchored VWAP sandwich right here as well. So this lower anchored VWAP, if I zoom in right here, it's lining up perfectly with the 200-day moving average. So this could act as another strong support along with that 200-day moving average. So definitely be careful every single time we hit that 200-day. You do not want to be shorting around the 200-day moving average. That's a very dangerous move. So, right now, what do I feel like? I honestly feel like we're a little bit overbought. I feel like we're going to fill those gaps. Now, if we hit this trend line and we bounce, I would be cautious. I would be very, very cautious because like I said, we could have that situation where we literally just bounce off the bottom of this only to have this massive rally to the top of that. So, maybe if you are in some put positions and we do fall down to this level, maybe you want to take a little bit of profits, and maybe at the same time you might want to keep like 1 or 2 puts or whatever, and then get some calls to hedge those puts. So, we're definitely gonna see early on in the week, how things progress in this new quarter. So, like I said, maybe we pull back to here, maybe we rip, or maybe we pull back to here, we fill all of these gaps, and then we retest this former resistance. So there's a lot of different scenarios that could go on. So you want to be very tactical going into the new month and going into the new quarter. So let's just move on here. If I'm looking at the VIX, let me just zoom out here. Like I said in the past, there is this macro support trend line. If we do get down to these levels, that would be like the low 17, so right around like 1730, 1750-ish. If we do get down to those levels, be very, 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 very cautious. Because as you guys have seen in the past, we have produced some massive bounces off of this level. If this macro level trend line was invalidated, and let's say we fall below this, we retest and we fall even lower, then yeah, I would pretty much be thinking, hey, you know what, we really are in a new bull market. But right now, we're in a new bull market. I don't believe that shit. I think guys like Jim Cramer are full of shit. So until I see that happen, I will still be a bear. So like I said, until I see this trend line being broken, retested, and then rejected, I will continue being a bear. So what would happen if we possibly hit this trend line? So if we hit this trend line right around like 1730-ish, I could see a scenario where we could just go straight up to this level right here. So do note that we do have this resistance trend line. It's been acting as resistance for quite a bit. So, I would think, this could take us right back to like 28-ish on the VIX. And that would be a pretty steep sell-off on the SPY. So definitely do pay attention to the VIX. And if we do start trading lower to those low 17s, be very, very cautious. You want to be hedged at the least. Now let's take a look at the dollar. So right now I'm on a shorter time frame, and I do want to note that we do have this wedge structure, and this is a falling wedge. We did break out of this falling wedge right here, and I do want to note that we also still have this gap. So this gap is still in play. Normally gaps on the dollar get filled pretty quick, but this one didn't get filled right away. So I do think that we could come back up to this. So this gap is right around 102.75 to 102.82. Now, I do know that there's all this news about, hey, you know what? The petro dollar is going to get dethroned and something, the petro yen. I think that this fear is a little bit overblown. The dollar is pretty much too important right now to get overthrown anytime soon. My ass will probably be dead by the time we see that. So I'm not too worried about that. Now, in the future, if we do start seeing more transactions like that, then yeah, I would be a little bit more concerned. But, I don't think basically regime change in currency, the primary reserve currency, I don't think that's going to change right away. It's not going to change tomorrow. It's not going to change next year. That would take a long, long time. So right now, I'm not too worried about these massive headlines that are being overblown right now. So I would not worry too much about that. What I would be a little bit more worried about for the dollar is us printing too much goddamn money, because that would literally cause the dollar to tank. So that is what I'm a little bit more worried about. Now, what about Microsoft? So if we're looking at Microsoft, I'm looking at the RSI right here. The RSI is at 69.15. So it's getting pretty darn overbought right now. And look at this resistance trend line right here. So I'm essentially connecting, let me just zoom in a little bit. I'm connecting this point, that point, that point, and look where we are right now. So it's right around 290-ish is where the top of this is at. So that could definitely get a little bit risky. Now, can we get above that? We definitely can. And do pay attention that we do have this gap right here. So if we were to fill that gap, that would be right around 295.73. So, maybe there might be a ton of people trying to short here, and, basically the market maker's like, screw your puts, boom, and then we fill that gap, and then we sell off. So definitely something to be mindful of. We are getting very over frothy right here at these 70 level RSIs. And I do have this anchored VWAP. So look how this anchored VWAP played out from the all-time highs. So we overshot above this, and then we came back and we back tested this several times, and then we bounced off to produce this bounce where we're at right now. So obviously, if we reject this, then yeah, we could possibly come back down to retest this anchored VWAP. And a steep sell-off on Microsoft would literally be coming all the way back down to this support trend line. So that would be a pretty steep sell-off from where we are right now. So, the tech sector is definitely, in my opinion, a little bit overbought. So that is why I'm a little bit more concerned that we're going into these overbought conditions into this new quarter, like I showed you guys with the QQQ. So I'm a little bit concerned that we are going to see some pretty significant pullback here in the near term. Now, let's go ahead. Let's talk about Apple. So Apple, I got a lot of crazy stuff going on here, but here's essentially what I'm looking at. I'm looking at this trend line right here. So we're connecting this and that right there. So can we inch a little bit higher? Sure we can. We could go all the way up to possibly 167, which is this high right there. And then you can see this is an area where we did pass through quite a few times. So as we get in these higher levels with Apple, there's no shelf of support. It's literally just massive moves and massive chop. So we are getting into this frothy RSI level. We're at 69, 67. So yeah, we could inch up a little bit higher. We could hit the top of this resistance trend line, which is this rising wedge right here. And then we could also hit that resistance right there, which is that area right there and this area right here, as well as that former support right there. So as far as shelves of support go in this level, it's pretty much just this right here. And then maybe this level right here at 171. So that's pretty much all we got. Other than that, it's just a lot of chop. So yeah, that's pretty much what I'm thinking about for Apple. Now, what about the pullback? I think the pullback could be pretty steep. So we do have this resistance trend line right here. It's connecting that top, and then this pivot point where we had this massive sell-off. So if we do at least pull back to that, that would take us down to around 160-ish. And then if we were to hit the bottom of this trend line right here, that could definitely take us a little bit lower. So possibly around like the high 150s. So maybe like 156, 158-ish back into this former supply zone. And do note that we are well above these moving averages. We have the 50-day at 151.46. We have the 200-day at 148.50. Now, moving on. Let's look at Tesla. So I'm going to make this very simple on Tesla. So I have these multiple anchored VWAPs. I have this one right here. So as you guys can see, we got this one, and we got this one on the bottom right here. So we broke past this one right here. And we also broke past this one. Now, here is the resistance right here. So this one is lining up, let's see. So this one's right around 212. And do note right above that is the 200-day moving average at 215.82. And then we do have this potential double top structure forming right around that as well. So definitely something to watch out for. And we do have the support trend line right here that we could, if we were to reject off these levels, we could fall back down onto that. So, that could take us to the high 180s possibly if we were to reject. So as long as we uphold this trend line right here and the 50-day, I think that Tesla is pretty safe for now. So like I said, the 50-day, this trend line, if we fall below both of those and we fall below these two anchored VWAPs right here, right around this 178-ish area, this 176, 178-ish area, then I think that is when we could possibly see this gap fill. So that's pretty much what I'm looking at for Tesla. And last but not least, the XLF. So XLF, we have three gaps right here. So if I'm just looking at the shorter time frame, the 10-day, 5-minute chart, we have this massive gap. This one is right around, let's see, 31 to 31.50. Then we got this one right here. That's 31.40 to 31.61. And then the most recent one that happened on Friday, this one's 31.81 to 31.96. So going into bank earnings, we have three gaps to the downside. So definitely something to be a little bit cautious about. Now, let's just kind of zoom out a little bit. So if we are looking right here, we've essentially just been in chop for a little while. And then, this right here, this could look like a bear flag situation right here. And we do have this massive gap all the way down here. It's at 25.23 to 26.21. So let's just say that, bank earnings are showing something very, very fearful, just like some serious issues in the bank stocks, just upon further examination of their earnings. Then, yeah, maybe we break these lows and then maybe we go down to this area. But personally, I don't really think so. Maybe it can happen, but we were in these highly oversold conditions right here. This was sub 30, so it makes sense to me that we do have a rebound rally on XLF. Now, one last thing that I forgot to talk about. Let me go back on SPY. So there we go. So here's this very bearish scenario that I could potentially see happening. So right here, this is a left shoulder. That's a head. This could be a right shoulder right here. So it's something to watch out for. And, if we do get this right shoulder right here and it plays out, yeah, we could hit those all-time lows. So that basically concludes the video. But this time I actually remembered that we have expected moves. So right here, I have the weekly, I have the monthly, and I have the quarterly. So let's just give you guys just a little bit of time to screenshot this. So this is the weekly right here. Now moving on, that's the monthly. And that is the quarterly. So hope you guys enjoyed this video and have a good one.